Good morning, students. In today's class, we are going to see the hire purchase system of accounting, model journal entries, ledger accounts, and a problem on hire purchase system. Let us see the journal entries first. If all the installments are paid promptly without any default, the various journal entries and ledger accounts to be prepared are listed below for easy understanding purpose. Let us see the journal entries. Journal entries in the books of the hire purchase are: for assets purchase, assets account data to hire vendor account. It's similar to the credit purchase where the asset is a real account. Always for journal entries, we have to apply either the golden rules of accounting or the modern rules of accounting. So apply the modern rules or the what do you call as a golden rules of accounting. So assets are real accounts. So rule for the real account is debit what comes in, credit what goes out. Similarly, when we purchase assets, assets will come in, the cash will go out. Here we are paying a part payment since it is a hire purchase system purchase. So we'll write the hire vendor's name. So we'll write hire vendor's account or hire vendor's name. Next, for the down payment, hire vendor account data to bank account. So bank, again, it is a cash, it is a real account, and if for a rule for the real account are debit what comes in and credit what goes out. I mean, cash goes out, so we are debiting the vendor account and crediting the bank account. Next, interest due entry, interest account data to hire vendor account. Next, we have the first installment. It's similar to the down payment. So here hire vendor account data to bank. So cash goes out, so we have to credit. Next, we have what depreciation. Depreciation account data to asset account. It is a typical depreciation entry as we are recording. Next, we have for closing interest and depreciation account, profit and loss account data to depreciation to interest account. And in case of the default, there will be an entry hire vendor account data to assets account. So ledger in the books of the hire purchaser, as you all aware that ledger are nothing but posting of journal in the appropriate accounts. That's called ledger. So hire vendor account here. So first entry, if you see assets account data to hire vendor account. So assets account data to hire vendor account. In hire vendor account, we'll write by assets. So in hire vendor account, we'll write by assets account. So here it is by assets. So next one, for down payment, hire vendor account data to bank account. In hire vendor account, we'll write to bank account. So in hire vendor account, we'll write to bank account. Here we have written for down payment. Similarly, for installment also, we'll write the same entry because these entries are same. So hire vendor account data to bank account. In hire vendor account, we'll write to bank account, installment paid. And next one, we have for interest. So for interest, already the entry we have seen that interest account data to hire vendor account. In hire vendor account, we'll write by interest. So in hire vendor account, we'll write by interest account. Similarly, we'll close down for the particular first year and we'll find out the balance, and we brought down the balance to the next year. And similarly, we have to complete the journal entries for the rest of the years given, and we have finally closed the accounts. Next, we have assets account. Similarly, in assets account, we'll write the entries are assets account data to hire vendor account. So assets account, we'll write hire vendor account. Depreciation to assets account. So in assets account, we'll write by depreciation and we'll find out the balancing figure and we'll transfer. This is the first year balance, and similarly we'll do the rest of the years. Now the specimen journal entries for in the books of the hire vendor. So if you see the hire vendor for sale, So for purchaser it is a purchase. Now for vendor it is a sales. So hire purchaser account data to sales account. For down payment, bank account data to hire purchaser. Here we are debiting the bank account since that we are receiving the cash. So next we have interest due entry, hire purchaser account data to interest account. For first installment, so bank account data to hire purchaser account, similar to the down payment entry. So next we have here closing balance of interest account data to profit and loss account. In case of default, repossession account data to hire purchaser account. For expenses paid on repossessed stock, so repossessed stock account data to bank account. Next for sale, bank account data to repossessed stock account. Here for the profit on sale of repossessed stock account data to profit and loss account. And for loss on sale of stock, we have profit and loss account data to repossessed stock account. These are the entries we will pass in the books of the hire vendor. Let us see the hire purchaser account. Let us see the ledger in the books of hire vendor account. So that is hire purchaser account. In hire purchaser account, the first entry we have hire purchaser account data to sales account. So in hire purchase account we'll write sales account. Next we have hire purchaser account data to interest account. In hire purchase account we'll write interest account. Bank account data to hire purchaser account for the down payment. Bank account data to hire purchaser account for the installment. And we'll find out the balance for the first year. Then the balance will be carried down balance will be brought down here, and similarly next rest of the years we'll calculate. Let us see a problem on hire purchase system. The question given here is Mr. P purchased 4 cars for rupees 14,000 each on hire purchase system. The hire purchase price for all the cars was rupees 60,000 to be paid as rupees 15,000 down payment and 3 installment of 15,000 each at the end of each year. Interest charge at 5% per annum. Buyer depreciate 10% per annum on straight line method. Prepare journal entries and important ledger accounts in the books of both the parties. This is the question. Here, for the solution, let us see the solution. First part, we have to calculate the interest. So calculation of the interest. Let us see the calculation of the interest. Here the calculation of interest, as I have in my first video of hire purchase system, I've clearly explained to you regarding the calculation of interest, both the models. Let us see the calculation of interest. As you all know, the cash price of the machinery or cash price of the assets less the down payment, add first year interest less first year installment. Similarly for second year, add second year interest and deduct the second year installment. And finally here there is no need to calculate the interest, since the balancing figure will be the interest for the final year. Let us see the cash price of the cars are given 4 cars, 14,000 each, 56,000. The down payment is 15,000. So deduct that, we'll get 41,000. First year interest 41,000 out of the amount due into 5%, we get 2050. Similarly for the second year, so for the second year interest out of the amount due 28,050 into 5 by 100, it comes around, the interest comes around 1,403. So add the interest, deduct the installment, second year installment 15,000. And similarly for third year, interest no need to calculate because the difference between these two will be the interest, that is the amount to be paid and the installment amount. That will be the due amount and the installment amount, that will be the interest. So we're getting 547. So it added, we'll get 15,000 less third year installment paid 15,000, the balance will be nil. We've calculated the interest. Next we have to calculate the depreciation part. Now let's see the calculation of the depreciation. As you all know, the buyer depreciate at 10% per annum at straight line method, so it's a very simple calculation. Here the cash price of the cars are given 56,000. So 56,000 into 10 by 100 is 5,600. Similarly for second year also, third year also the same amount will come, because since there it is a straight line method. So deduct that 5,600 from the cash price of the machine, we get 50,400. Second year depreciation, deduct 44,800. Similarly third years 5,600. That the balance of the cars comes around 39,200. Let us see the ledger account in the books of the hire purchaser. So we'll prepare the hire vendor account. So as I told you earlier in the format, I have shown you the ledger accounts in the books of the hire vendor. Similarly, those who feel that the journal entries are very difficult for them, they need to memorize four things in the hire vendor account. First thing is the assets purchased entry. That is on the credit side will record, that is higher the entries are assets account data to higher vendor account. So in higher vendor account we'll record the assets. So assets, interest, to bank for down payment, to bank for the installment. These four things you have to remember when you prepare the higher vendor account. So if you remember this, you can do the higher vendor account very easily. Now let us go to the higher vendor account of that particular problem. Here in the hire vendor account, as I told you, four things you need to remember. First thing is assets purchased. Here the assets are car, so by car the cash price is 56,000. See, one more thing I'll tell you, with the help of this interest calculation table itself, we can close that ledger account, the hire vendor account as well as the assets account. So everything is here itself, so no need to bother about that. So let us move to the first thing is that cash price 56,000, it is there, and the down payment 15,000. First year interest is 2,050. First year installment 15,000. So we need to remember the asset, cash price, down payment, interest, installment. So we have, from this table we'll take it here, and by passing the journal entry, after passing the journal entry we are posting it to the ledger account. So by car 56,000, interest first year 2,050, to bank for down payment 15,000, to bank for the installment 15,000. So total it, that comes around 58,050, and the balance is 28,050. The take that balance brought down to the next year 28,050. And similarly for second year interest 1403. Let us go to the table again. Here it is. So let us go to the table once again. Here the table is given. In the table we have second year interest 1403, second year installment 15,000. So again come here to the ledger account of high vendor account. Here interest you have to record 1403, and installment 15,000. Then again total it 29,453, and balance will be 14,453, and brought down the balance to the next year. And similarly for third year we know that the interest we have calculated 547 by balancing the amount, and then the final installment 15,000. So 15,000 and 15,000, the account gets tallied. So this is how we prepare the vendor account. So this can be done by two methods, either direct method without passing the journal entries and directly putting the ledger account, or you can pass the journal entry and in some cases they'll ask you to prepare the journal entry and then post it to ledger account. I would suggest for those who feel that the journal entries are difficult, for them they can prepare the ledger directly, and then afterwards we can write the journal entries. How to write the journal entry? Here it is. So first entry will be cars account data to hire vendor account. The second entry, bank account data to hire vendor account data to bank account. Next, hire vendor account data to bank account for installment. Then next interest account data to hire vendor account. So similarly we can pass it for second year and third year also. Let's move to the ledger accounts. One more ledger account we have to open the assets account. So let's move to the assets account. First one, assets account, that here we are purchasing cars, so car account. So in car account we'll write cars account data to hire vendor account 56,000. The depreciation we have calculated 5,600. As you see here, the previous table we have calculated the depreciation 5,600 for first year, since it is a straight line method. Second year also we have calculated, and third year also the same amount will come because of straight line method. So we have calculated the depreciation, so it's very simple. So cash price of the machinery, a car or assets are 56,000. First year depreciation 5,600 minus balance it 56,000, and balancing amount to 50,400 brought down here, and then second year depreciation, then balance brought down here, and the third year depreciation and brought down. The final after depreciation, the asset value will be after 3 years 39,200. So next ledger account, in the books of the hire vendor we'll prepare the hire purchaser account. So for hire purchaser, this is like sales. So again we'll move on to the format. Here it is, you need to remember this. On the debit sales to interest, on credit sales by bank, for down payment by bank, for installment, and then the balancing. So four things you need to remember in the hire purchaser account, that is in the books of the hire vendor we prepare the hire purchaser account. In hire purchaser account you have to remember this. So if you remember this, then definitely you can able to do the hire purchaser account also. In the books of the hire vendor account we'll prepare the hire purchaser account. So four things: sales interest on debit, bank for down payment, by bank for installment. These are the four things you have to remember. We'll move on to the hire vendor account. In the books of the hire purchaser account, sorry, in the books of the hire vendor will prepare the hire purchaser account. So four things: sales interest by bank. For first bank for in down payment, and second is for installment, first installment. So for sales the cash price is 56,000. So interest, first year interest 2,050, and by bank first down payment 15,000 we are paying it. Next we are paying installment of 15,000, then balance it comes to 58,050, and we'll get the balance of 28,050. Next, brought down that here from 28,050, bring it here, and again second year interest 1403, and total comes 29,453, and deduct the installment 15,000, we'll get the balance of 14,453. Again brought down this 14,453, then interest for 547. This is also with the first table we are preparing here, and the final installment 15,000. The balance of that account also 15,000 at the end of the year. It is balancing, so no question of getting the balancing amount. So I hope you have understood. I hope you have understood the answer, and we'll meet you once again in another video. Thank you.